I'm Danielle Hale, Chief Economist for Realtor.com, and here are this week's things you need to know. A possible slowdown in economic improvement caused mortgage rates to hit a new record low this week. This gave a boost to home purchase mortgage activity, even though higher prices are offsetting some of the benefit of lower rates. I don't expect big mortgage rate changes after the Fed's meeting next week, because inflation in August was only modestly higher than expected. And even if inflation runs higher, the Fed is more concerned about slow growth than high inflation. That means lower rates for a while. Instead, we may learn more about the Fed's long-term strategy and 2023 outlook. Job market data highlight the slowing improvement that helped drive rates lower this week. While July job openings are much higher than the initial pandemic shock, there were roughly 2.5 unemployed workers for every job opening in July. That's better than 4.5 in April, but still higher than the last 2 years pre-pandemic, when there were actually more job openings than unemployed people. More recent weekly jobless claims data also showed no improvement, with the number of workers filing initial claims still 3 to 4 times a normal level. Focusing on housing, weekly data show that it's still a seller's market, with home prices rising, homes selling faster than a year ago, and the number of homes for sale still dropping. Potential buyers looking for some good news in addition to low mortgage rates could note that our housing demand index took a step back this week, while the supply index improved slightly. But 1 week's improvement doesn't change the seller-friendly dynamics in today's housing market. Low supply is a consistent theme. Only 20 of the 50 largest markets have a new listings trend above the January baseline. This makes supply the least recovered subcomponent of our housing recovery index. Areas that have bucked the trend and seen recovery in new listings growth are centered in the West and include Las Vegas, San Jose, Phoenix, San Diego, and Oklahoma City. Find more details and data for download at Realtor.com/research, or follow us on Twitter for real-time updates. Have a question about the economy or housing market you want answered? Ask away.